Hi, this is Kerry Artag with Wicked Stocks, bringing you the daily Tesla report for Tuesday, January 17th, 2023. Before I jump into the charts, please click like if you would, and subscribe to the Wicked Stocks YouTube channel, and share the content if you would with friends and colleagues. It helps us out a great deal. Let's take a look at the charts. We'll start with this one. Like to start big picture, work our way into the day, but just a reminder that about 5 weeks ago, the week of December 12th, we had yet another meaningful sell signal. Up to that point, those channel structures, those channel bottoms that are presently 158.81 to 166.92 had been considered able to contain quarterly selling pressures, possibly into later 23. That obviously didn't happen. And so we had a sell signal the week of December 12th that indicated our next target being this set of channel structures, which are more steeply descending. Usually the more steeply descending a line study, the less reliable. And so we did bottom out in this area that this week is 95.29 to 106.99. You can see them represented here in the support and resistance area. 95.29 multi-week containment, able to contain selling into February, possibly through February, and above which, as I've been saying, once tested, and we've started testing it a couple of weeks ago, this area that is now in the 158.81 to 166.92 area in reach over the following 3 to 5 weeks. So we're a couple of weeks into that. Can we reach that over the next few weeks? We certainly may. One of the developments from last week was a settlement above the high of the weekly low from 2 weeks earlier on a weekly bar chart. This is usually a sign of follow-through buying. It doesn't always happen, but it is yet another sign that this market wants to recover, and the next significant resistance in terms of the big picture remains in the 150s, 160s. We'll be watching this area closely on the daily chart, especially, as you can see here, 159.61 to 168.01. So this is the same exact formation, but on the daily chart. And I'll be watching this, obviously, on a day-to-day basis if we approach that meaningful resistance area in the 150s, 160s. And so for the week itself, and I've also been mentioning this, we have a former long-term descending trend line this week at 137.66. Sorry, today at 137.66, dropping daily, and a more steeply descending trend line at 129.99. These are about the only line studies that are in this vicinity, but they're still respectable. I'm not a big trend line guy. I think I've said in the past, I like speed lines and channels, but there's really nothing here with respect to those two. And so 129.99, you can see here, I still have as a session containment level. We may see that today. I'll get to that in a moment. Well, I can say right now that if we push or open above 122.42, and we may because we closed right there. I'll show that in just a second. If we push or open above 122.42, 129.99 is likely today, and we can top out for the day at that trend line. And if we close above 129.99 today, then the 137.66 trend line is likely within 1 to 2 days. This area here, following the testing of our long-term support, has been considered a 2 to 3 week target, and now we're in the sort of the zone of maybe this week. Let's take a look at kind of zoom in just a bit. And I can remind you that about a week ago, we had a turning point when we settled above this descending channel top that is presently at 114.18. So for the day, I've got 114.18 that is meaningful support, may contain selling for the entire week itself. But I've got it just sort of as a 2-star support area. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. We can continue plodding along here for the next couple of days, but we do need to get up and go to the upside and push beyond these highs from last week. And, at that point in time, I may reestablish this as a 3-star solid weekly support level. But if we happen to break today or open especially below 114.18, I show 107.04 here, but I've rounded it down to 106.99, which, if you recall, is this long-term channel bottom on the weekly chart. So I'm opting for that instead of the 107.04 level. They're almost the same, 5 ticks apart. So if we break, and I'm going to say really if we open below 114.18, then 107.04 or 106.99 becomes an intraday target. Breaking 114.18, that depends on what time of the day. If it's the last hour of the day, I doubt we'll see the 106.99 level. 111.03 and 109.52 are both respectable intraday support levels. If we happen to close back below 114.18, though, there is the real threat this thing could unravel all the way back to that 95.29 level, which is, once again, this base of long-term weekly channel support. But this is sort of the downside scenario that I'm not anticipating. Right now, it still looks to me like we're in recovery mode. After having tested this midterm support region, the 160s, 150s, 160s remain our 3 to 5 week target, which once again is what we see here on the daily chart. And this is our target area for the week once again. And let's get back to the day itself. Actually, I'm going to show you this chart, and maybe we can zoom in here just a little bit. And, you can see how we've got this trend line coming off this series of lows from November. It's actually performed quite well this week. At one point as session containment, reduced to intraday only. I still have it as intraday resistance only. I was already talking about this a moment ago, that this line can contain intraday buying, and from here we can fall back to this 114.18 channel support, which would represent a buy opportunity into later week, and above which I'm going to say 129.99 likely over the next 2 to 3 days, and that 137.66 long-term trend line that's not shown here within the week itself. So pushing or opening today above 122.42, you can see it's quite likely we'll reach 129.99, where we can place a daily high. And closing above 129.99 is considered an eventuality. And if so, is this? Yes. If so, 137.66 likely within a day or two. So I'm showing you all of the sort of levels for the day and the week ahead. And these are the formations here for the day. 114.18 support, 122.42 intraday pivot, below which 114.18 and reach, above which 129.99 likely, where we can place a daily high. That's sort of the day trade dynamic. The 3 to 5 day swing trade dynamic is buying or being long above 114.18, anticipating the 137.66 level. That is our 3 to 5 day swing trade. And at 137.66, you can liquidate that long and even set a short position on the 3 to 5 day time horizon, because we can fall off from there, perhaps back to the 114.18 formation within a full week of doing so. That would be quite a sell-off. I think just a modest retracement is likely at that point in time. It could be something like this, where we test 137.66, we fall off for a few days, and this trend line that's dropping steeply at 129.99 winds up containing the follow-through selling pressures the days to follow before we then rally and take 137.66 out. It would be a settlement above 137.66 that would accelerate this 3 to 5 week target well above the market at 158.81 to 166.92 to within 1 to 2 weeks. I'm trying to think if there's anything else to say. I'm going to take a real quick look at, while I have you, just to give you a heads up for the Triple Q, the NASDAQ 100 ETF, long-term Fibonacci levels. If you're not a subscriber to wickedstocks.com, we do a daily Triple Q and a weekly NASDAQ 100. We've been testing long-term Fibonacci support now since October, the low 300s in reach as our next big test. So this is another reason why I think expecting a stable to bullish dynamic as we move through the balance of January is sort of the way to go. And also, this is the SPY. I also do the daily SPY report. This is a weekly SPY chart. We dropped to within 1% of this long-term speed line about a month ago, still anticipating recovery over the next few months into the 420s, 4:30. So there's the daily SPY report. I think I'm going to leave it at that. There's really not else to say here for today's, that is Tuesday's daily Tesla report. I'll be back tomorrow. Please click like and subscribe, and we will talk soon.